Hello everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, the spot price of steel showed weakness. The spot price of domestic hot-rolled coils remained unchanged this week, while the price of rebar decreased by 30 yuan per ton. At the macro level, the number of initial jobless claims in the United States last week was 263,000, reaching a nearly 4-year high. The poor employment data has led traders to fully factor in the scenario of the Federal Reserve cutting interest rates 3 times before the end of the year. Currently, since the pricing of the interest rate cut expectation is relatively clear, it is necessary to be cautious about the expected difference caused by the rise in inflation in September. In China, the sentiment against involution has been mentioned again, and the sentiment was relatively intense on Friday. Among them, the price of steel was supported by policies. In the industrial sector, the weekly output of the 5 major steel products changed little, decreasing by 34,100 tons. However, there was a differentiation in output among varieties. The hot metal output recovered to 2.4 million tons per day. The output of hot-rolled coils increased by 107,000 tons per week, while the output of rebar decreased by 67,500 tons per week due to the losses of electric furnaces. With the gradual end of the off-season, the subsequent steel output may begin to increase. On the demand side, the demand recovery after the military parade was quite considerable, and the demand continued to increase by 155,000 tons this week, mainly due to the increased replenishment demand of the downstream of hot-rolled coils. In terms of inventory, the accumulation rate of the 5 major steel products slowed down this week, with a total inventory accumulation of 139,100 tons. At present, the pressure on the factory inventory has not accumulated, but the absolute inventory has shown pressure from a year-on-year perspective. In summary, during the off-season operation of steel, the supply-demand contradiction in the fundamental aspects has accumulated to some extent, but the overall contradiction is still not large. Due to the rapid recovery of hot metal this week, the raw material price is relatively firm. Coupled with the market's renewed mention of anti-involution, the overall price is somewhat supported. In terms of profits, the current profits of steel mills have been compressed a lot, but the steel mills have not yet seen a large pressure to reduce production, so it is difficult for the market to trade the negative feedback expectation. Looking ahead, the price increase space of steel in the off-season has not been opened up, but the bottom is supported by costs. Before the steel demand is clear, it is mainly expected to fluctuate. In terms of procurement, some purchases can be considered after the spot price falls. From the institutional perspective, the current anti-involution policies provide strong support. However, due to seasonal factors, building materials-related varieties show weakness, and their upward momentum will not be significant. On the downside, the strong policies on the coal mine side provide cost support for steel, which limits the downward space of steel prices. Before the demand picks up, steel prices will fluctuate in a range. To summarize, recently, steel prices have found support at the bottom and tend to fluctuate. Among steel varieties, long steel products, billets, etc. are recommended. Okay, feel free to leave your thoughts, questions or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.